no, just joking, of course. We on the Flow Show take things very seriously here, as you all know. Do you have a good weekend, boys?
Yeah, not bad, not bad. Thank you. And you?
Yeah, I need a boat to leave my house again today.
Oh man, really?
Yeah, it's crazy, yeah. It's really pouring down.
If they tell us next summer that there's a bloody drought in this country, I'm going to tell them where to shove it, because we've had enough.
You're saying so, and we thought the same thing. But then I think no later than this weekend, some propeller heads came up and said that it should be raining for another few weeks before the water levels are back to where they should be. But
well, with the way it's going, probably will work.
Anyway, I don't care. My team won the first game of the World Cup. I see you in the final.
you know, guys, I read it's the first time a host nation has lost the opening game ever.
Yeah, that is very surprising, where it is.
Yeah.
And it was an ex-West Ham player who got both goals, actually.
Exactly. Ex-West Ham and ex-Man City, no?
No, I don't think. Did he play? I don't think he played for Man City. You think he played for us? And
did he never play for Man City? Oh, okay.
I don't think so. And then he went to Everton from us.
Ah, okay.
Ex-West Ham and Man City's Carlos Tevez, right?
Yeah.
Good player. Anyway.
Yeah, very good player. Anyway, back to business.
Yes.
RA says it's all global warming. Oh, I don't know about that. It's about 4 degrees here, so this global warming isn't all it's cracked up to be. Still, you're probably on the beach this weekend as usual.
Mate, it's t-shirts and shorts here still.
Right, get him off. Right, let's get stuck into the important stuff. And what's going on in markets and the latest headlines. Not too much out overnight this morning. China left their LPR rates unchanged last night as expected. The 1-year loan prime rate left at 3.65%. The 5-year left at 4.3%. As pretty much as expected, they seem to have paused from taking a softer route on rates at the moment. There was a press piece out last night or over the weekend from on the PBOC. Pretty much the usual waffle. They're going to keep the yuan stable. They're going to look to keep the economy on track. Blah 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 blah. But there were some comments from some Chinese bank analysts, economists, whatever you want to call them, and they were talking a bit more about potential stronger effects of inflation. That the PBOC might start watching for possible inflation pressures. We have seen inflation in China ticking up a little bit. This is coming even as they've been under various lockdowns and whatnot. And these guys being on the ground in China, you know, the effect that the state has on that, may be a slight message coming through that at the very least China may move to maybe a bit of more neutral as they have been of late. But if inflation pressures do pick up, particularly external inflation pressures coming in to domestic price levels, that may cause them to maybe slightly shift to a more hawkish stance. But that's something that we'll need to see if that happens. For the moment, they're still in the midst of the COVID cases rising, particularly in Beijing. Additional steps for testing people who arrive into the city. I think it is they're now going to do that now required 3 tests on the trot when you come into the city to make sure you're not carrying any lurgies. But on the inflation front, the NDRC said that they're going to reduce fuel prices. So they are on one side looking to act against rising prices by bringing full fuel costs down on that. Japan, I've got nothing from Japan this morning. You got anything from Japan this morning, Kay?
No, mate.
Nothing from Japan.
Nothing at all. Quiet on the Japanese front. I haven't read anything around.
No, nothing from Japan. So we'll skip Japan, and we'll come over to the ECB. Friday, ECB's Nagel said that they can't stop with rate hikes and further decisive moves are necessary. ECB's not says as policy tightens further, the pace of hikes is likely to slow. Bit of a repeat comment there. Expects rates to broadly reach neutral territory in December, but there's a long way to go until rates peak. He also said that they won't see the first effects of their actions until the second half of the year. So it means they're a bit like some of the Fed members saying that although they're hiking, they're yet to really see any impression made by those hikes, and maybe won't see them until the first half of next year. But there's still some who want to maintain a cautious approach. So we've still got a bit of a decide on whether we're going to get 50 or 75s going into the December meeting, and we'll keep an eye on the expectations for that. ECB's Lane was out this morning saying that they will make a hike in December, and the scale of it should continue to make progress towards the inflation levels needed, or towards the rate levels needed. But no message there on what size he thinks, but it sounded like they're again leaving the door open for perhaps a bigger hike than much of the market is expecting. We're talking 50s, 75s rather than 50s, 25s or anything like that. He also said that they must consider lags in policy transmission for the December hike. So again, a bit like not needing to see the actions from hikes coming through, how it's going to affect things, the economies in general. Coming over to the Fed, on Friday, Fed Collins said that the Fed has more work to do to bring inflation down, and likely needs to hike interest rates more after rate hikes end, which is a bit of a strange comment. After rate hikes end, they likely need to hike more. Anyway, whatever that is. The Fed will need to keep rates in place for some time. There was a bit of a flood really last week of Fed members coming out. And apart from Brainard, who was let's call it unhawkish rather than dovish, they've all pretty much been reiterating the Fed stance that rates are going to continue rising and that they're going to be held up for quite a while. I think that's towards the end of the week at least got some of the pivoters questioning some of the moves that we've seen down in the dollar in yields, and we've had a pickup in the dollar and yields since then. Fed's Bostic was out saying though he was ready to move away from large rate increases, but again the path still remains set for them. There was also a Boston Fed research conference, and details of that came out late on Friday, and they said that the US jobs market is little affected by the pandemic, so they're not seeing yet any weakness coming into the jobs market, and we've seen that from certainly the data from the NFPs and stuff ongoing. Still waiting to see if we're going to get a turn in the jobs market. The jobless claims last week still continuing just to nudge up slightly, so pointing to some weakness, but they're not making huge jumps or negative numbers in that. So there's nothing flagging from there that suggests we're going to get a really bad set of jobs numbers. That is potentially the final domino to fall, or the last box the Fed wants to see ticked, the jobs market tipping. But they won't be swayed by one report. If we get a bad jobs report, it's unlikely they're going to go, yep, that's it, we're done. They're going to want to see a sustained period of weakness in the jobs market. That won't stop the pivoters from having another go, selling getting yields lower, pushing yields lower and selling the dollar. But we're going to play this yo-yo between what the Fed says and what the pivoters say. The last Fed member was Kashkari, pretty much saying what a lot of us know already, that the entire notion of cryptos is nonsense. What do you make of that one, Stelios?
Yeah. I've said it so many times. I think technology is here to stay. Blockchain, NFTs, all that. I think it's the future. But I find it difficult to understand why some things have certain value and why some don't. But then again, I'm an old dinosaur, so forgive me. But anyway,
Yeah.
I agree with some of the things Kashkari says. I do.
We can join the rest of us dinosaurs who think cryptos is a load of crap, but we acknowledge that the technology behind it is what matters rather than all these silly coins that are floating around.
Or JPEGs of monkeys, exchanging hands at 17 million. I mean, that just gets me. Anyway, sorry.
Yeah,
I'll stop.
We can do a whole show on that probably, but like you say, let's move on. There's been some chatter over the weekend in the UK that Sunak was apparently going to consider some type of Swiss-style relationship with Brussels to try and maybe ease through these Brexit mess that's still ongoing. That was hotly denied over the weekend after that story broke, and you know what they say, nothing is real until it's been officially denied. So that's something we'll keep an eye on as well. Still got these talks over the Northern Ireland Protocol ongoing. At the last look, there was said to be friendly, constructive progress made, but no real details there. They were doing some checks that was all going tickety-boo. But anyway, we'll wait to see what happens there. Not a lot on the data front this morning, but there was a bit of a shock, call it a shock if you like, from German PPI. That came in negative 4.2%, was expected to rise 0.9% and was 2.3% prior. Year on year, it dropped to 34.5%, was expected to come in at 41.5%. So a bit of a move off the PPI there, maybe a bit of a blow off the top because it's been one-way traffic up for quite a while. We'll see whether that means that we've got a peak in German inflation or is this, as I say, just a bit of a blow off the top. Again, I am expecting inflation to moderate a bit in the Eurozone as much as in the US. It can't keep going on up as it has been, although the Europe, UK is in a bit of the same boat with the energy mess. So prices, even though they've come down and storage is full, it may just be a temporary reprieve until next year when they've got to refill stocks and continue moving away from Russian energy. But in the meantime, yeah, the numbers speak for themselves, a bit lower in PPI. Guys, you got any other headlines before we take a look at the calendar for the week?
Nope.
Sorry, guys. Yeah, I saw one line in Lane's interview saying that he said each meeting will be different, but one platform for considering a very large hike, such as 75 BPs, is no longer there. And we know that Lane always is the one who presents the big playbook to the ECB government board. So in his opinion, it's not a 75 BPs that we are going to get next time. And then the other thing is that seeing banks under which the squid Goldman was saying that they're starting to lower their forecasts for oils. Looking at the persistent COVID shutdowns in China and so, and thinking that it will weigh more on the oils and stuff, but that's more like an opinion piece than really news, right? The last thing, and I'm going to say straight away, I'm not a big believer of CFTC data because they only represent the percentage of what's really going on in the market. But it seems that last week, and it must have been continuing into the end, into a good part of Friday as well, that the dollar market has reversed from being long to being short. I don't know whether it's like a real big news, because we knew from price actions that the dollar has been suffering for a week and a half. But yeah, anyway, the data are saying that the market has flipped somewhat. So which may also explain the move that we saw this morning.
Yeah, I was having a look at that story. It was Bloomberg peddling it, and and they were saying funds have turned short, and I was looking at the CFTC report. Now there's no straight dollar contract. It's all versus other pairs. So this is a report you can see on the screen now. So the top one is the Canadian dollar. So this is all versus USD. Now what it has is the different types of firm, if you like, that they cover: leverage fund, asset manager, that sort of thing. And just probably looking at euro dollar is probably the bigger one, because it's obviously the bigger contract. So you can see, like, in dealer intermediaries, they're short there, but then asset managers and institutionals are long overall. So I don't know where they're picking their numbers from. If they're picking their numbers from, because there's another report which shows us the speculative side of the market, so other investors that are not institutional. The numbers there are a bit different as well, so I can't see where they're pulling their numbers from. But there is something to be said from the CFTC data. It's lagging. It's from last Tuesday. And as Kay said, it hasn't got a big influence on stuff. Futures don't have that big an influence over what happens in spot markets, and it is only a small snapshot as well. And I've seen these positions being offside for, I think I watched it once, for 2 years. People were offside in dollar yen, so it didn't really reflect anything in terms of that. But headlines is headlines, and the market pays attention to them. And if Bloomberg are spouting them about, people are going to be watching that. And also, as Kay says, it's a bit, might be a bit, old hat, that the fact that people have gone short, considering what pairs like dollar yen have done, and all the others in the last couple of weeks. So maybe no shock there. Let's have a quick look at what's coming up this week. Got a couple of key numbers coming up. We've got the RBNZ coming up, and there's a bit of a thing going on with the RBNZ. They had one of these shadow banks or shadow meetings, which went for a 75 pip hike. I know you picked up on this earlier, Kay.
Yeah, let's see. The shadow board, they have this stuff running, NZIER. Let me pull up the link and put it in the chat room. They're always making comments, and it's like it's the Institute of Economic Research, basically, who posts opinions about what the RBNZ may have to do or should do according to them. I've put it in the chat here. So they are saying that it should be 75 BP, where OR was a little bit more cautious over the past meetings, but data are saying, and especially the CPI are saying, that they could raise another 75 BPs come Wednesday early morning for us. And we are seeing, especially Aussie Kiwi, the divergence between the RBNZ and the RBA playing out the last couple of weeks, where Aussie Kiwi is quite a bit lower, gradually coming down. And I wonder if there's not a bit of sell the rumor by the fact coming up for the RBNZ. So it's going to be interesting, this one, to watch this week.
Yeah, and the rate probabilities at the moment for the RBNZ are, for a 75 pip hike, are around 64%, and a 50 is priced at 36. So the market potentially leaning towards a 75 pip hike. So if they don't go as high, that might be the bigger price risk. And as Kay mentioned, could see Kiwi going the opposite way. It's PMI week kicking off this week as well. Europe and the US on Wednesday, we start getting the PMI numbers from S&P Global. More housing data via new home sales, durable goods as well coming out, and the main conference board consumer sentiment. This isn't the the Michigan one. This is the main conference board one. We'll watch for those inflation expectations as usual. We also get the FOMC minutes, which tend not to throw up too many surprises these days, considering the amount of Fed speakers we hear each and every day since the last FOMC. If you don't know what they're doing by now, then you can catch up from the Fed minutes. But you never know, there might be one or two surprises in there if that pops up. Not a lot elsewhere for the rest of the week, really. Get some GDP data from Germany into Friday, but other than that, yeah, it's very quiet. ECB minutes as well on Thursday.
Yeah, just one thing. Keep an eye on Sunak is talking in front of the what is it? The
CBI.
The CBI, the Confederation of British Industry Bots. So could have a bit of a yo-yo effect here on the sterling, depending what he says.
Yeah, keep an eye on that. Keep an eye on that. Right, yeah, that's it. So not a busy week at all on the data front. But as I say, a couple of key points to keep an eye on. So what's going on in markets then? And Kay's mentioned oil, when we might be creeping down towards Biden's bid level. I'm assuming we're all going to be parked up just ahead of him. In where's he bid? Around 65.70, I think, isn't he? Get that?
Yeah, somewhere there, or up to 72. I don't recall exactly. I'm probably going to be 72.10 bid.
Yeah, so get your vulture trades in ahead of Biden. But obviously we're joking. We don't know where he's bidding, but that's the area that's been suggested of where they may start to buy back oil to refill the SPR. Nice trade if you can get it, sell it at the top and buy it at the bottom. I wish we all had the beans to be able to do what these guys do. But definitely keep an eye on that recent low that we've seen just down there, coming in around that 76 area. If that goes, it could be a little bit of a blowout towards the $60 mark, and a bit of a double bottom down there in the low 60s. So just keep an eye on there if that continues to move. I think a lot of this is coming again on the China stuff. But I keep coming back. We talk about China being open, being closed, shutting down and all that. It's not really shutting down to the levels we saw a year or so ago. You know, factories are still going. They seem to contain it a bit more now. You know, big production lines don't need hundreds of people in real close proximity. Is this shutdown stuff as big as it was last year?
Yeah, I think so, mate. Because there's just more cities and stuff, and yeah. But let's face it, we don't know 100% of what's going on there. That is one thing. But no, I think it's as severe because we shouldn't be looking at Beijing, but it's all the rest where the big plants are, where the big car plants are, the big manufacturers are. They are still like in a pretty dire situation, I think.
Yeah, but is it just the residential part of it? We're not hearing that, you know, apart from the stuff over the Foxconn stuff. You know,
no, but there was another city. There was another
big factories closing down.
Yeah, but if you tell the people to stay at home, they can't go to the factory, can they?
No, but
that's where the biggest concentration of people will be anyway. So and I think it's still pretty bad.
Yeah. Okay. Well, as I say, it's just the last time we were hearing this factory shutting down, that factory shutting down, ports were shutting down. Yet we're getting none of that because they do what they have been doing to some of the factories is camping people on site to keep them outside the general population so that stuff can keep running. I mean, we're not hearing of any, you know, backlogs in shipping like we were last year, all the supply chain stuff going on. I don't know. I'm just thinking that side of things, is it as bad as last year? And when we talk about China being open and closed, is it perhaps not as closed as it was last year? But I guess we'll wait and see as we go through the winter.
I think probably not as bad as last year, but the problem, like K-Man said, is that, well, I mean, we don't know exactly what's going on. Yeah. That's the thing. So It's a big thing. I think it's still a very big problem, but I don't think it's as bad as last year. But it's still huge. It's huge, and it's
Yeah.
affecting markets everywhere. So that's the problem.
Yeah, no, you're right. And as you say, you can't. Sometimes you can't stand in front of the market. But as I say, I think if you see oil down in the 70s, 60s, I'm potentially going to be looking at it maybe for trying some longs, because I can't see things generally being as bad as they have been last year, particularly with COVID. But anyway, something to watch in oil markets. Now the dollar generally has picked up. We'll take a look at dollar yen, as we often do. As mentioned just previously with the headlines and stuff, into Friday, latter part of the week, we have seen the dollar gaining again. We had this level around 140, 60, 70s, finally went. It's had a bit of a shoot up towards near 142 on the back of that. Yields responding as well. I think this is purely for the moment just a case of things going too far previously after the CPR report and this flood of Fed speakers coming in, but also a little bit of the risk move. Again, China in the mix and lower oil and recession fears and whatnot. It was something I was pretty much expecting. I haven't traded it to alongside on this one, but I still think there's room to go here in dollar yen. I still think there's a big risk from Powell popping up. And by the way, he's next scheduled to speak officially on the 30th of November, just before the Fed blackout. So that's one thing to circle on your calendars, to keep an eye there, because if he comes out and he's just as hawkish or maintaining the path that rates are going to go up 5%, maybe more, and maintain there for a long time, I think we could again eat away at a lot of this move we've seen in the dollar. And if we get that, I'm going to be looking to re-establish shorts for a longer term play. I was short small at 148, never got better levels to add to it. But I think if we get up to sort of this 145 zone-ish, again, that may be where I start to scan in some small shorts and maybe look for a build again up towards that 150 area should we go up there. So I think there's a bit more scope to see the dollar gaining over this week, but it could be a bit of a rocking boat between what we get from some of the data points, the PMIs, consumer confidence, that sort of thing. I think it's going to be two-way traffic for this one, but overall, short term, I'm seeing the dollar a bit higher. What do you think of the dollar, guys?
It's a good question, and I think you nailed it. It's all about Powell, and I fear that the chances are that he's going to be hawkish again for the last time. I've said before many times, I think Q1 2023, we're going to see inflation go down quite fast, and that's when the Fed is going to turn, I think. But at the moment, I think chances are that he's not going to be dovish. So for the dollar, I think we could creep lower a little bit, but I think the next move is probably another spike higher in dollar, spike higher in yield, spike lower in risk, and then it's all over. So, but yeah. I think we have one more move, and we have to be wary of that. If anybody wants to go long risk, you have to be aware that the risk is still there, that Powell disappoints.
Yeah, and as you can see there from 2-year yield, we're still maintaining that rule of thumb, if you like, rough ceiling area for Fed rates at the moment, of where the top is going to be in rates 4.5%, 5%, that sort of area. That this market here, 2 years, is going to come into question at the next FOMC to see if the dots shift higher, and then we might get another shift higher in this one. What do you think yourself, Kay, generally on the dollar?
Generally, yeah, I think we've had we've had all the Fed speakers out. We had all the data out that people wanted or needed to see for now. We had the correction, the correction or the reversal. I think it's as you wish to call it. I don't usually use such a big word, so let's call it a correction in the dollar. And I think for now, that correction has ran its course. People in the room will know that I bought dollars last night on the open and overnight. I think there's going to be a period of still range, in my opinion, but we've seen also from the, as you were just showing, the 2-year rate is moving gradually back up. Fed speakers have been talking about the 5%. Those 2 years should sooner or later reflect where the terminal rate should be, give and take 25 or so BP. So there's a possibility we move up to 475-ish again if the market is reluctant on what the data will show and not want to go to the 5%. But we're going to be more in ranges until we know more about real data. We might have to wait until the labor report to come out to get the next big move in yields, which will drive the dollar. But until then, I think we have sort of digested everything now. And looking at the yields, they are telling us that they are not going to fall further out of bed much more than what they did in the corrective or in the negative side of things. So I'm a bit more constructive towards the dollar, especially the start of this week. The end of the week will be everything about end of month and stuff like that, and then we'll see what happens, what the models need to do based on equity moves and bond moves and stuff. But at least for the start of this week, I'm a little more constructive on the dollar. But I don't think we are going to break any new ranges. If the euro gets back into the 101s, or why not closer to parity and stall there again, that's a possibility. The dollar yen, I'm a little bit more constructive because of that one line that Kuroda came out with at the second half of last week, saying that they are going to look at the wages, what's happening with the wages. And those wages are not going to be decided this calendar year. They should be decided the first quarter towards March of next year. So I think he's sending a message to the markets that until his end of tenure as a government of the Bank of Japan, they won't change much. Now, never say never. They did surprise, but the next meeting is only, let me look at my sheet, the 20th of December. So there's still nearly a month to go until the next Bank of Japan meeting, and I would not think, of course, never say never, that they will surprise us in between. So whatever happens in between will be dependent on real hard data, and we have seen the data in Japan also doing the yo-yo, being better for a while, and then now seemingly seem to slip again into more negative, onto the more negative side of things. So I'm a bit more constructive on the dollar yen, let's say, compared to some other dollars.
Yeah, thanks, mate, and pretty much echoes my thoughts as well. As I say, I think we can see dollar yen climbing up a bit over the next few weeks, and particularly maybe into POW. And yeah, I want to be back in shorts in this one for a long term, because I think the pressure's mounting on Japan, on Bank of Japan. You know, they want to see sustained inflation. Well, we've been watching inflation rise now for 2-3 months, and showing no signs of abating just yet. So I think the screw is going to slightly get turned on them, if not in real terms, but from the market perspective. Do you want to take the screen, mate, and have a little look around?
Yeah, sure. Let me start with the dollar yen then. Let me start with the dollar yen. First of all, the daily, it's going to be a little, you know, my charts are sometimes a little, how shall I say, difficult to read, but I know my mess, so that's fine. As we see, we have started to respect the daily Ichimoku cloud again. The bottom comes in at around 40.40 today. 140.40, and we started the week bang on it, and we've seen a quite decent little rally in the dollar yen forming off of the base of the Ishimoku cloud. So that is one again that we should pay attention to. We've got a bit of resistance right here around 141.95-ish, 90.95-ish. And there's a bit of one of those Ishimoku indicators who lies around 142.25. This 141.90, 142 is a bit of an area that I'm keeping an eye on. I do, as I usually do. I'm always trading my positions around. It does allow for the stop side of things to be less painful very quickly if I'm right. So I have traded it around again this morning, waiting for some setbacks to get back in, perhaps the low 141s. I'm not saying we're going to push up to 145 again, but if we look at a little closer to home, no, I need to go back to the daily. This channel from really March of this year, this channel that had been broken to the downside is getting pretty close. It's also around this 142. So keep an eye on this around, call it 142, give and take 10-15 points on the dollar yen. If that goes through, we may start to move towards these levels again, 145. But it's a bit early to call. The week is very early, so first of all, watch this 142 on the dollar yen. If we start to get back, as I was showing, sub 140.40, 140.25, and then things may turn sour again, and we get back lower. So for the time being, I'm really monitoring that underside of the cloud and where we started the week, really to see whether we can hold those levels. On the euro side, so people were looking, it doesn't show here, but people were looking at this 102.70 zone, was the low here. We are below. We've also broken back through the underside of a bit of a triangle formation that's around 103, call it figure 10. So that for me is going to be the first decent level of resistance. We are below 102.60 fib here, and then now we are going to seemingly retest the upper side of this prior channel, which is around 102.15.20, call it. It's going to be people watching this 102.15.20. 101.95 is the prior high. So this zone 95.20, call it 95.20, should come in as a bit of support on the euro. If not, we could see at the start of this week, as I said a bit earlier, a move back down to 101. Why not? Without really changing too much. We see on the more medium term, we had this correction, people call it reversal, start of the reversal, possibly, but if you look at the really bigger scheme of things, we are still in really corrective territory, technically, and I would say even fundamentally, I don't see too much of a reason to start to break out of recent ranges right here and now. On the cable, interesting one last week is that on the excuse me, positives coming out of what the investors may have been thinking as a positive on the sterling in regards to the government national coffers. We have also seen in the details that some of those spending cuts or stuff are not going to happen straight away. So I think sterling is a bit at risk here from losing some of its shine. We are on a bit of supports. I've shown in the room as well, 95.05, just above, trading 118.20 right now. Keep an eye on those. It could hold and consolidate this triangle formation, and in which case we're going to move back up to 119s. But personally, I'm not sure if we are going to be able to hold those. So to me, the more medium levels that I'm watching are 117, 40, 60 still. This is always been decent traffic zone for deeper moves. So if we get a retest, which we had first last week, and then we bounced 200 points, if you get a retest again of this, like, pay close attention to what happens there. That for the sterling, Dolly and Don. Yeah, on the Aussie, I think so. Aussie is driven by a couple of things. It's of course going to be driven by China, although lately it did live a bit life of its own. But I'm a little worried here that we couldn't hold the 66.40. We're not trading that far below. But then, if you would consider this being a bit of a head and shoulder as well, we're also below 66.30, which is the neckline, which is a fib, which is a prior high. So this 66.30, 55, 50 zone, to me, is the one to monitor at the start of this week. If we can crawl back above, Aussie may be in for a retest of the recent highs. If we hold below, there could be 65s in there, mid 65, low 65. It's possible at the start of this week. Please monitor this 66, 30, 50, 30, 55 zone for a starter. Kiwi, that could be a bit of a flag. I don't know. 61.20, we've broken a bit below, but then we have 61, and even though the flag shows it a little lower, I would say watch the 60-60. Look, 1, 2, 3 times, and 3 times we bounced off it. Watch 60-60, and that to me is one that I'm going to keep a close eye on. If you think it's breaking, I don't know which side of the Kiwi you're leaning to. I'm pretty neutral going into the RBNZ. I think we have done most of the moves. I think we could be rangy. There is a possibility if the dollar strengthens a little bit more for a retest of this 60-60, but I'm not going to chase it lower or even go with a break. But we have quite a few supports into the RBNZ: 60-60, 60-45, 60-35, 60 and a quarter. There's a big support zone waiting here. I'm not sure if it goes lower that I want to chase anything, and I'm really going to wait for the RBNZ to tell us what's happening. And this one has been gradually sliding down as well, and I think that is what I meant. That's what I meant a bit earlier on the RBNZ RBA divergence. Now, it doesn't really. It hasn't been shown in the hard data really. But I think it's pure divergence between market expectations of RBNZ and RBA. So we had the move up into end of September, end of the month, and then since then, in the advent of the RBNZ, we did have a bit of a better data as well here, I think, on the or here even. On the RBA labor report, but it really couldn't hold anything. It couldn't hold the 110 and a quarter here. And now we are sub decent support, 108.85.90. There's a bit of this trend line as well coming in from further down, 108 and a half that was. So this 108.50.90 is going to be the zone to monitor, in my opinion, post RBNZ. If we get a sell the rumor, buy the fact move, then watch for this 108.80 to hold for a move back up into the 110s. And that's going to be data driven, I think, if we see real data, or possibly what OR is telling us in the comments. They also have a projections meeting this week. So there's going to be a lot of information coming out of the RBNZ. So for the time being, I'm not chasing anything. It is possible even that before the meeting, we are going to come down here into the low 107s. If we do, then it will really have the looks of a sell the rumor, in my opinion, and I might actually try to catch a knife with some protection around this 106.60 or so. But that's for what's happening a bit later in the week. Another one, dollar mix. I'm going to leave it for what it is. It's rangy for now. I don't see a trade really right now. The dollar is doing a little bit better, so against the mix, but we're really. I'm trading the mix as being part of the US block, really. Still, this thing was looking to break on Friday and then violently retraced. And I'm going to show the EuroCat because it's nearly a perfect overlay. So this one, I didn't start to sell it because it was looking really big until Friday. Although we never came to threaten the 2040s. I didn't really dare to step in front of this move on Friday. But in the meantime, failure, a little bit of a triangle here, failure as well, back through to 2010. I'm starting to perhaps look at an opportunity if we think that as I do, that start of this week could be a bit positive for the Americas block. Any move back up to 2010s could be worth a try for a move back down to 1990 perhaps, but again, it's the jury is out on this one. We've had this 1% roughly up and down swings very, very quickly. So bear in mind, it's still an emerging market currency or a developing market currency. So the moves can be pretty wild. So adapt your amounts when you trade that. Then a quick look on the EuroCat while I was on there. It looks to me a bit like failing up there. 1, 2, 3 attempts now back through this trend line in the 138s. That's the one I'm going to monitor, but it looks as if we may have a chance to get back into the 136s from here, just on a possible correction inside a bigger move. But looks a little bit failure up there. And then lastly, the metals have been and we've been warning against those failures, right? Above 122 in silver, above the above that 200 DMA that has failed again. And now back through this trend line as well. And we're coming to rest now on 2050-65, which is a bit of a support zone. The more important one is going to be in the low 20s, in my opinion. If I'm right in saying that we are in a bit of a better dollar environment, start of the week at least, that we shouldn't rule out a retest of 20. And whatever is below will be, I'm going to monitor whatever is below come the second half of the week. Of course, being an industrial metal, as we repeatedly said already, this is going to be driven by what's happening in the manufacturing side in China as well. If China reopens, this has really the potential, and the dollar is a bit weaker. This has really the potential to take off, but for the time being, it's still very uncertain. And really, you showed gold already? Did he already show gold, Ryan, or not?
I was going to, no. But,
yeah, all right. I'll give it back to you, mate.
Yeah, no worries, mate. Let's grab the old screen back.
Unless Dale wants to comment on something.
Not really. I just want to say that I agree with you on your comments about silver. I let go of my long for a small loss, and I'm going to take a step back and reconsider, because this story with China and in general economic activity falling.
Uncertain, right?
Yeah, and also the risk of Chairman Powell being hawkish again. It just doesn't inspire at the moment. So I'm being cautious as always. And as we said before, it's better to take some small losses and then hopefully ride the winner as well, because than hope and hope and hope. So
Yeah, absolutely. Yeah, absolutely. Standing in front of it right now or trying to catch a knife is a bit hopium, right?
Yeah, yeah, and when the move comes, it's going to be, huge double digits. So
Yeah.
it doesn't, no point trying to be a hero or trying to catch the bottom. So a little bit of patience is good, and as I said before, taking a few small losses is not bad, provided that you do get the win, obviously.
Yeah, exactly. All right, thanks, mate.
Good stuff, guys. Thanks for that. Just before I take a quick look at the charts myself, a bit of a quick update on some of my positionings. Don't forget, if you want to join the ForexAnalytix platform, you can do so. Come via that link I've just popped in the chat. You can get an exclusive 20% discount off the length of the subscription. However long you hold it, you can keep that 20% discount. Also, check out the Traders Funding Program, getting a lot of people with a lot of success in this, getting through the assessment, getting a full account. You obviously do also get access to the ForexAnalytix platform, depending on how long or how big an account you go for. The longer you get free access to ForexAnalytix. If you're already a subscriber or just taking advantage of the 20% discount, we will add this subscription onto your current plan for the whatever period you take. I shall put, you've got that link in there. That's the second link in the chat there. So check that out. If you want to scale up your trading, your only risk really is the assessment fee, which starts at $250 for a $25,000 account, all the way up to $1 million account. If you get through the assessment, let's say you get $1 million account. If something happens, it all blows up. You lose $1 million. You can claim fame to losing $1 million, but it hasn't cost you anything more than the assessment fee. That is your risk at all times. So low risk, big reward if you check out the Traders Funding Program there. Right, just quickly, and then I'll let you guys and girls go. Euromex, I was looking at this one. I did take a break buy on this little spike above and got completely flipped out on that. I thought we were maybe going to see a bit of a blow through on the break there, so I tried a little buy stops just above. That completely went the other way, so I gave the FX gods some of the profit. $1 I'm keeping an eye on at the moment because we are trying another go into this zone up here. I'm still long from down below. It did what it needed to do around about the 710, 712 area Friday. Found support down there rather than a move all the way back down again. So a bit of a battle developing between sort of 710 and this 717, 18 area here. If we get through that, then I want to see it above 719, 720, maybe get a push up to the next zone up there. But if we do, potentially we're going to be getting up to the mid to high 7s, 20s, 25s, that sort of area again. That's one I'm looking I'm long, and I'm going to see how high I can push that one up. Dollar Hong Kong finally playing ball pretty decently. We're bang in the middle, give or take, of the band range. For those that may not know, the Hong Kong dollar is set in a particular band between 7.75 and 7.85, as you can see there, and it's kept in range for however long they need to keep it in range for. So 780 is bang in the middle. I'm range short off the top there. If we get a move all the way down to 70.75, I'll reverse that into a long and try and play it the other way, as long as it doesn't cost me too much on the carry, which it shouldn't do because I'll be long dollars. So it could be a bit of carry in there as well. That's another one to keep an eye on. Just to touch on Aussie dollar, because as you know, I'm long that as well. I actually, because I'm, as Kay says, also a bit more constructive on the dollar this week, or maybe for a couple of weeks, this does have the potential to move down further. As I was saying last week, if we can't break the highs, there's only one way it's going to go. And if we start knocking out the support points, it's going to continue lower. So I'm not surprised to see this move. I won't be surprised if it continues lower. I will be looking at this zone to potentially add back into my trade. I did cut some of the longs up here into the 68s. But this was a big area that we were watching here on the Flow Show and elsewhere for quite some time. That's an area I'll be looking for potentially to add back into my longs, maybe play a bit of a short-term trade there as well. And similarly as gold, pretty similar picture to Aussie dollar. You know, had a look at the highs, couldn't hold it. Then we're just seeing the lows come down through the support areas. Next support area starts round about 35 down to sort of 20s, 1720s. If we can hold in here, it's going to keep this rally alive. If we don't, then we're going to be seeing probably 1700 not too long after. The big zone for gold is down at this 1685, 75. Again, regular viewers of the show here, F.A.C.E everywhere, will know that we've been speaking about this area for a long, long time. So that again is the potential area, excuse me, that I would consider getting back into longs again. But here, not so much. I like to play the bigger levels for me. And on that note, we shall call it a day. Thank you everyone for coming to the Flow Show. Wish you a great week ahead. If your football team's kicking off its World Cup campaign, wish you the best of luck for that as well, unless your team is playing England, and then I hope you crash and burn.
Thanks, chaps. Thank you, everybody.
And, yeah, you know what, Stel, I'm getting a bit of a sore throat, mate. I might have to go to the doctors about 1 o'clock today, just as F.A.C.E is starting.
No worries, we're here.
Yeah. Oh, it's really terrible. Nothing to do with England kicking off at that time either. Oh, I promise you.
Yeah, just coincidence.
Honestly.
Pure coincidence. Cheers, mate.
Cool. Yeah, thanks, Kate. Thanks, Dale. Thanks, everyone, for coming to the Flow Show. And we shall see you all tomorrow, unless England's lost, and then Kate can deal with it. I'll be down the pub. See you later, everyone.